Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Euro-dollar. A bullish white soldier yesterday after Friday's indecisive doji cross. It was another interesting close over the bright red upper trend line of the early July to date, well, almost to date, let's say early July to September, descending expanding wedge pattern, currently 108.25 to 117.01. And it is now prompting me to organize some potential targets above for a move up and out of this pattern. Mind you, this is not a great version of such a pattern, though the upper trend line had been a significant resistance in the recent past. Prices rose up to the twin downtrends at 117.76 and 117.82 respectively, but failed to push through them. I don't really rate these two that highly, and I would rather look at the dark blue neckline a little further above, which is currently at 118.15, as a better source of resistance. This is the familiar resistance of the dark blue neckline for the significant combined June to July head and shoulders top, which was also a double top, formed from the head and the second shoulder. Looking below, we have the October 21 high at 116.92 and then the green short medium moving average currently at 116.66. We're further down the November 2020 low 116.02 and the 2019 high just below that at 115.70. Now, looking further above, we have July's high at 117.88 and June's high at 118.29. Finally, as I've said now repeatedly since about March this year, we are set up with nearly 9 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we'd be on. Anything in between and we would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the results at the end of the year will be, just that we are set up to achieve one, though right now looks very much like an annual key reversal up. Now, so far today, a move higher over the twin downtrends and the June high, but we're not really yet stabilized over this last one. And we are now eyeing that dark blue neckline overhead, the one I previously mentioned. Cable, aka sterling against the US dollar. A bullish engulfing pattern yesterday after Friday's possible hanging man pattern. Okay, so the market had mainly been moving sideways since early August, caught on the top side within a congestion band between the September 2020 high at 134.83 up to 135.81, which has just below it the green short medium moving average, currently at 134.75, plus the mauve medium moving average, currently 134.72. This sideways action caused the market to exit on the top side out of the recent bright red early July to early August descending expanding wedge pattern, but the market had until yesterday been in no hurry to try and achieve the top side targets. We still have a primary target X target above in the 136.78 area, and a secondary harder to reach target X2 up in the 137.88 area. However, yesterday prices pushed up and out of this congestion band up to the next congestion band overhead between 136.21 and the February 22 high at 136.43. Beyond this, apart from target X at 136.78, we have another congestion band between 137.47 to 137.88 containing the January 22 high at 137.47, the 2021 to date downtrend currently at 137.62, and a combination of 2025 high and secondary target X1. Finally, much like Euro-dollar, we are set up here for this market to make that rarest of patterns a possible annual key reversal. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we'll be on. Anything in between and we would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the results at the end of the year would be, just that we are now set up to achieve one, though it does look like we are moving towards an annual key reversal up. Now, so far today, a move up into the next congestion band, the smaller 136.21 to 136.43 band, and also towards target X at 136.78. US dollar against the Japanese yen. A counter to the counter bearish dark cloud cover pattern yesterday after Friday's immediate countering bullish engulfing pattern. The market continues to be capped by the Fibonacci congestion at 148.68 above, possibly stretching now down to the Fibonacci congestion at 148.11. Now the congestion at 148.68 is also at this time reinforced by this very slowly declining gold long moving average, currently also 148.68, with higher up the 50% Fibonacci line of the July 23 to July 24 move at 149.61. Looking below, we have Fibonacci support, and it has recently been quite good Fibonacci support at the 61.8% Fibonacci line of the July 23 to July 24 move at 146.69. We also had some dubious support, now possibly turning into resistance, from the rising green short medium moving average, currently at 147.49. Below that, we have the mauve medium moving average, currently 146.18. Overall, we are still in between the dark blue middle time below, currently at 144.26, and the dark blue upper time above, currently at 154.86. And that's of the important, large, shallow, and longer term, early July 24 to mid-January 25 bearish shift pitchfork. So far today, well, a further move lower down towards the base of the recent rectangle pattern at that lesser Fibonacci line at 146.69. US dollar against CNH, the offshore Chinese yuan. A counter to the counter bearish dark cloud cover pattern yesterday after Friday's immediate countering key reversal up and bullish engulfing pattern. It was a fresh move lower as prices now seem to be starting to move away lower below the dark blue neckline extension to the January to April 2022 reverse head and shoulders bottom, currently 713.17. As well as the bright red lower trend line extension, currently at 713.94, for the mid-January to late April 2025 descending triangle, which actually seems to be more substantial resistance. A little higher up, and we have Fibonacci congestion at 714.95 and 714.48. That can be regarded as one single congestion area. Meanwhile, looking below, we have some free air all the way down to the congestion between 706.32 to 706.57, made up from the 50% Fibonacci line of the October 22 to April 25 move and the June 2023 low, respectively. However, the market has even now seemed shy to testing that far down just yet. Finally, it's a strategic observation once again, and one I'll be continue to be making here. Please note how the long moving average, currently 723.35, has been, despite some up and down waves, relatively flatlining for quite a while. So that if prices do stray too far away from it, then they seem to be brought back in towards it. And that applies in either direction. So far today, well, a further attempt low of a new low, one not seen since November 2024. US dollar against the Brazilian real. A fourth bearish black crow and a significant third consecutive close under the purple May 24 2-date uptrend, and that's currently at 540.07, which, unless things change, I'll shortly realign. Plus, it was the lowest close since early June 2024. It's been a concerted attempt at a break lower, though it has run into a lot of support down here, but nevertheless closed for a second consecutive time under both the August and July 2024 lows at 537.59 and 536.76 respectively. And as well as within the next support zone, which is between 530.85 to 532.15. And that's made up in part from a 38.2% Fibonacci line for the October 19 to December 24 move at 532.15. Now we have another 38.2% Fibonacci below at 527 from the October 2018 to December 24 move. All this action does once again show the resilience of one of the showrunners for this market since April, and that's that overhead bright red upper time, currently at 540.34. It is actually quite impressive. and that's of the mid-December 24 to mid-April 25 bearish Andrews pitchfork. Now beyond this, we have a recent July-based congestion band between roughly 552.21 to 561.09, with just below it the slowly declining mauve medium moving average. Well, it's actually in there at the moment, but 553 even, and the green short medium moving average currently 547.25, which is actually below it. US dollar against the Mexican peso, a seventh bearish black crow yesterday after Friday's inverted hammer pattern, traditionally seen as a bullish reversal, but it is a controversial pattern as many technical analysts see it as a bearish continuation pattern, which may now tie in with the long run of bearish daily patterns we have recently seen. Yesterday was also a third consecutive close below the recent rectangle pattern formed from the cap of the market. The congestion between the 50% Fibonacci line of the April 24 to February 25 move at a 1876.94 and up down at 1885.40, so that's where the top of it is, and below by the very significant pairing of the February 2020 low at 1851.71, along with the 61.8% Fibonacci line of the big old April 21 to April 24 move at 1850.81. This had been a relatively narrow congestion, but one that held up the market since early July until last week. Thus, we have a primary target X not too far away below at 1831.80. You can just barely see it. I don't think we can actually have that one out. Come in, there we go. Now you see it much better now. At 1831.80, and a secondary hard. Let me just get this chart, this thing sorted out, because it's, there we go. That's better. 1831.80. And a secondary harder to reach target X1 down at 1816.20. Interestingly, apart from the lesser Fibonacci line at 1817.60, we seem to have little support right now until the July 2014 low at 1759.58 and the August 2017 low at 1756.93. It's actually an interesting situation. We're looking forward to see what develops. Now, so far today, well, nothing much hanging around yesterday's close right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.